Hi, everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap, June 27, 2026. Yeah, folks, summer is here. June is just about over, 4th of July coming up. And remember, folks, if you want to live on this beach like Jimmy Buffett used to do at one time, then you've got to learn how to invest even better than Warren Buffett does now. And this week, the market showed how fast money can come out of the Mag 7 and some of those other semiconductor stocks, and also stocks which have already doubled this year. But some of that money is going into housing, which is now up nicely this past few weeks. And housing has been in the doldrums for about a year and a half now, and just the past couple of weeks has been coming to life. And the weekly stock analysis video, Darden Restaurants has been good to us in the past. However, 2027 looks like a slower year for this company. But still, as of now, it is doubling in price, the S&P so far for this year. And we look back 15 years and we see that the dividends this stock has generated, because they're growing about between 7 and 8% per year, these dividends over the past 15 years would have cumulative doubled the price that you had to pay for that stock 15 years ago. So those dividends are really coming in nice. And those are the kind of stocks that you want in the dividend growth and income portion of your overall portfolio to help pay some of your bills when you retire. And retirement doesn't mean, I'm going to wait till 67 or 70. Retirement means whenever you can pay your bills and have enough money coming in to do that and live your present lifestyle, that's when you can retire. It gives you freedom. And these are the kind of stocks that will help in that portfolio, because you want to protect against inflation, but yet you want some income from some of the portfolio, and you want some money put aside in T-bills in order for those emergencies that come up. Because any emergency that comes up in retirement, you want to be able to have that cash available. So emergency is a short-term inconvenience and not a lifetime or life-altering situation. More on that as we get into our course, which will be coming out in a couple of weeks here, folks. And our ETF video, the semiconductor ETF was the top performing. Can you believe this? Top performing ETF in our watch group 2 weeks ago. But this past week, it was the worst performing ETF in that same watch group that we keep an eye on. Home construction was the best this past week, much to everybody's surprise. And our portfolio of our home construction and housing ETF combination, we put those two together and picked the best stocks out of it, is up twice as much as the S&P 500 as of Friday's close. Okay, year to date, just a quickie on Darden. The Darden is in blue, the S&P 500 is in black, and you can see that the Darden is up 16.5%, not counting that nice dividend, and the S&P is up 7.6%. Actually, it's lower than that because this chart was taken before the close on Friday, and the S&P closed down on Friday. So Darden is beating by double, no matter how you look at it. Okay, let's look at the S&P 500. And folks, we thought we were going to get a divergence here to the upside, but on Friday the S&P closed down, and it closed just under the 50-day moving average. You could see this little blip right here. That's where it closed. And so that's worried a little bit, and what really worries us, it did it on very high volume. This red line here, that's the volume on the down day, and you can see that it eclipsed, almost doubled the down volume of the past couple of days. So this might be the final sell-off heading into next week, which is a shortened 4-day week, and with a 3-day holiday, 4th of July coming up. Usually the week before a 3-day holiday has an upward bias, and we'll see. Problem is, this intermediate term indicator down here is now just about to enter the oversold territory. So with this still pointing down, we have to be very, very careful. But back up here, this looks a little positive if the market can turn up in here Monday or Tuesday. And when we look at the same S&P 500, we are watching this 7,300 level right in here. And we can see that we close at 73.54. Now this indicator up here looks like it wants to turn up. And what does this indicator measure? It measures the travel of the market during the day and where it closes, in the top half or the bottom half. So when we look at this, we're zooming in. This is the open. So the market opened low right at that, went down right to that 7,300 level, and then took the rest of the day and turned up, and it closed in the upper half of its daily travel. And that's what gives this line up here the chance to maybe turn up. But we've got to see Monday and Tuesday an upward market, which would be nice. And again, we're worried about this volume down here. And of course, as in last slide, we're saying this indicator is starting to get oversold. So when we look at the protection that we've had last week, the SPY closed at 746. Remember, the SPY is 1/10 of the S&P 500, closed at 746 last week. This week it closed at 728. So you can see we had a down week this week, which is not unusual for the week after options expiration, which is usually the third Friday of the month. And the thing is, we had a holiday last Friday, so the last trading day of the month was actually on Thursday. So the next week is usually a down week, and it certainly was this week. So it was a down week. And folks, we are looking at, we have July, August, and September protection in these puts here, and some of you use, and let's go back here, some of you use this indicator. When it starts turning down, that's when you put your puts on, and when it's turning up like in here, you can take those puts off, or you just leave them alone. You don't buy new puts until finally it's coming down. Others of you have some puts on all the time, and others never use puts. So it's 6 of one or half a dozen the other. And puts cost money, absolutely, that's insurance. So it depends on where you are in life relative to your portfolio. And if you want some protection all along, you're going to give up some of your upside, but usually our growth portfolio outperforms the S&P, and over 23 years it has more than tripled on a compounded basis, where the S&P has returned about 10% over the past 23 years, and our growth portfolio has returned about 17% per year, not counting dividends, over the past 23 years. So you have a little extra money there to buy some protection or keep some protection on if you want to. And let's go to the QQQs. Last week the QQQs closed at 740, and Friday afternoon, and I'm recording this Saturday morning, so Friday afternoon it closed at 706. So you can see there was a nasty day for the tech stocks, and we do have our September portfolio protected. August and July also. 3 put options cover about a $200,000 portfolio. So folks, we had a tumultuous week this week, and yeah, I use that word again, and it was just a plain down week. And usually the week before a 3-day holiday, which is this coming week, usually there's an upward bias in the market, and that's what we're looking forward to. After all, it is the 250th birthday of this country, so it's an important holiday here in the U.S., and if it helps an upward bias in the stock market, we'll take that and the holiday also. So folks, you go out, take your mind off the market this weekend. Stay safe, stay healthy. We'll see you right back here in a couple of days.